Yeah, here we go, it's the Web3 show. Before you know, it will be Web4, then Web5, Web6, Web7. But now it's Web3, so let's all go to heaven on a podcast here. This ish is the best. Learn and laugh with Travis and listen to Chris. Donna lives in the house with Verity and Nova, talking about AI to help you get over. Yeah, like I said, it's the Web3 show. Now you know what you didn't, so let's freaking go.
In what could be the biggest bullish type news for the crypto space, Bitcoin ETFs could become a thing. I'm here as always with Mr. Chris Snook and the one and only Donald Lim. How are you guys doing, gentlemen?
Doing very well.
Hi, Travis. Hi, Chris.
Woo! All right. So, you know, we've been chatting offline. We've been looking at all these Bitcoin ETF applications happening. BlackRock, who I hate. I'm not a big fan of BlackRock at all. They own over $10 trillion in assets, and I'm not a big fan, but I'm a big fan of Bitcoin, and it looks like that maybe one of these days these ETFs will go through, right? What are you seeing on this, Chris?
I think it's interesting. I mean, you know, it's kind of, there's been a lot of press around it the last couple of days. You know, BlackRock obviously can be a polarizing brand, as you already mentioned. The interesting thing is they've chosen Coinbase as their custodian relationship, and the SEC, which has rejected 30 other spot ETFs to date over the last decade or so, doesn't really seem to care for crypto as an industry, although they've said all along that Bitcoin is a commodity and it's separate. They've been very clear about that. But it's interesting that BlackRock comes out and does this, because you could read the tea leaves in one way and say they know something that maybe others don't. They don't waste their time. Why would they do this unless they're going to get approved? Then you could put your tinfoil hat on, which I don't recommend anybody do. But if you do that, then you start to think about, well, is this just so they get rejected? Because that'd be a signal that it's not a legitimate asset, because even if BlackRock can't get a spot ETF approved, then that means this is nothing to look at. That would have different implications on this recent pump we've seen. But I don't think that's going to happen. I think that's an interesting, you know, coffee talk table. But are they going to play an intermediary in this Coinbase SEC lawsuit? What is this all about? Now, at the end of the day, Wall Street just wants to make money. We know that, right? And so this is a place where they can make money. Retail investment usually hits momentum as we come near a halving and beyond a halving. No one doesn't think that, certainly not BlackRock. So it might just be they see this as a great time to finally enter the space. And what it would mean for the industry, as we've known all along, is a spot ETF, which is the easiest way for retail investors to access an asset class, because it trades on exchange, lower fees to mutual fund, trades in real time, and has all these other things that are beneficial to a normal investor that may not understand the space or know what a cold wallet is or a seed phrase. It drives momentum and it drives mass adoption. So it's a big signal. And I would imagine if they get approved, whether it's cronyism or not, it'd be very hard to deny other applications from other legitimate firms on the heels of that. So as we've seen, several others have reapplied. I would imagine that would only continue.
Let me ask you this, because I think that this is an interesting question, because, you know, I've been a big fan of gold and silver throughout the years. And actually back in 2011, when I was buying gold and silver, I should have been buying Bitcoin. Big time. If I had actually invested only half of my gold and silver in Bitcoin at that time, I would probably be disappeared on an island somewhere. You never see me, because and what I did was I lost half of my money, the value, because silver went down over time. But paper money and fiat currency, they kind of do the same thing with gold and silver. I've done the research on this before, and either gold or silver, one of them, that for every 1 ounce, there's like 500 paper ounces. And for every one of I think it's for every 1 ounce of silver, I think it's 550 paper ounces of silver, I believe. And then with gold, it's like 225, 250 ounces for every real physical ounce of gold. And so to me, are they going to be doing something similar like this with Bitcoin, where more and more people they're investing in an ETF potentially, and now they're buying Bitcoin that doesn't maybe exist, and so they're not holding the keys to their own Bitcoin, so they don't actually own the Bitcoin? How is that going to play out? Do we have any information on that?
I think that's the same also here in Asia. That's the big question, right? Do you really want to own your crypto, right? And it's like the real money that you have and you hold on to, or are you buying like something like from the stock market, like shares of stocks? Wherever this goes, we're looking and we're waiting and seeing, because the volume here is not that big yet. But we all know currently that Bitcoin is still somewhat the god of cryptocurrency. It's like the blue chip, right? So if you don't know what to buy, just buy Bitcoin, and that's your step into the cryptocurrency. Now, whether we use an ETF or we create our own, we have our own wallet, we buy Bitcoin through there. Bits and pieces, we're doing some efforts there. I would believe that a lot of the SECs around Asia would be looking at what the US would be doing.
Yeah, I think, to answer your question, Travis, I don't have the exact answer. What's different about gold and silver is they're not finite assets, right? We know them as money for the last 6,000 years, so they have a stability that other assets don't have. Gold and silver have always kind of been a store of value, but at the same time, there isn't a finite supply of it. There's still more in the ground. The question becomes, is it profitable to go dig it up? And the difference with Bitcoin is,
and we're not going to have a meteorite land on Earth with a bunch of Bitcoin on it, right? So we could have a big meteorite land with a ton of gold on it. And we're like, woohoo, boom.
Right. So I don't know the answer to that. I mean, here's what I do know is that you're buying essentially exposure through an ETF, an exchange traded fund, for those who don't necessarily know what an ETF stands for. You're buying exposure to the price of an asset, in this case, Bitcoin, if it's a Bitcoin Spot ETF. And since spot means in real time, or the price to right now, that means you're basically buying exposure to Bitcoin at the price it is when you buy it. And if you sell it, the exchange traded fund allows you on a stock exchange to get in and out of that trade in real time, basically same day if you wanted to, right? So if you're speculating, if you're trading, if you're trying to do that kind of activity and you want exposure to Bitcoin because you think a big collapse is coming, or you think a big bull run is coming, then an ETF provides most people a much faster, easier way, without all the KYC and whatever, to use their E-Trade account or whatever it is to go buy exposure to Bitcoin. So that's why it's good. But it's not owning the actual Bitcoin, right? You're just owning a claim against that essentially stock certificate that's the exchange traded fund. If you own the actual Bitcoin, whether you own it and have it custodied somewhere else, or you put it on a cold storage or what have you, and you have it off chain or like off exchange, in cold storage, you actually own the hard asset. Now, there's only 21 million Bitcoin that are ever going to be minted, as we all know. And so the amount of paper derivatives that could exist on that, in some ways, I don't think will be the same as gold and silver and other things, because they're still speculative on the sense of you could make more. Right, 80% of the official gold, I'm told, is owned by central banks across the world. Right, 20% is in people's safes and at home, or in gold coins, or in Rolex watches and things like that. So the corner of the market on gold and silver basically is the central bank, specifically the G7. What this leads to ultimately is potentially the ETFs becoming a way where massive accumulation of the hard finite asset that is Bitcoin, the 21 million of them that'll ever exist, many of which have been lost forever. Whatever that finite asset is, whoever owns the ETF essentially is going to be accumulating the hard asset while they sell paper exposure to their holdings. And so you could end up with a world 5, 10, 15 years from now where 80% of the Bitcoin is owned by 10, 15, 20 hands. And so that's kind of how I see it working out. Now, you could still have exposure across the masses, but the actual underlying physical asset, or in this case, digital, but the real asset, the hard asset, would be owned by those who have accumulated. In Grayscale, for instance, has somewhere around $16 billion right now of Bitcoin, right? So, they own 500,000 or whatever the heck it is. BTC, Michael Saylor, MicroStrategy, they have somewhere around 140,000 BTC, right? So if you do that as a percentage of 21 million total fully diluted cap table, that's the game everyone's playing, right? Is how much of that total cap table will I own as my corporation or as my fund? And then an ETF, once approved, gives you a way to basically monetize that without actually having to sell off your hard asset.
It's really interesting. And so, there's a link in the timeline and down below here from News BTC that talks about the BlackRock Bitcoin ETF, the timeline. There's a big race going on for that first Bitcoin Spot ETF, and they're talking about it. So like now they've put in their application. Now it depends on publication, the Federal Register. So maybe they're assuming late July. Then if they extend it a little bit longer, we're talking maybe August 15th or so. The final deadline for all of this, there's all these different extensions and different timelines that I think the government or whatever can push back. The final deadline would be February 2024, which is at this point, I believe, about 3 months before the halving. So all this stuff is really sort of timing out. So it says that the SEC must announce a decision after 240 days from the time that this thing was put into the application process. So that means the very latest will be February 23rd. So what I could suspect, as this not being financial advice, but if Grayscale and BlackRock and Fidelity and Valkyrie and all these other ones are putting their information in, and they're big companies, big asset holders, a couple of them are big ass hats, then what's going to happen is the price of Bitcoin over time, we're going to go 30. What I could see, it's at 30 right now. I can see it going 30, and then one day it's going to go boom, and it's going to go up 10, 15. You're going to start seeing 10, 15 grand pump ups until it gets to the all-time high, which is 69,000 something. And then boom, shortly thereafter, it'll be 100 grand. That's if we're going on what the way things have been before. And also there are charts out there that show what's happened in the past when other things have gone ETF, and it's been one of these things, and then that price just sort of goes boom. So if that's the case, it would seem to me that $100,000 Bitcoin is a no-brainer in shorter time than we would probably expect, guys.
Wow.
Not financial advice.
Yeah, but I think that's the same also here. I think we're getting a lot of murmurs already here about placing their bets on Bitcoin, because the rest are not that secure. I mean, if you're going to go into high risk, high reward, speculative, whatever you call it, right? You're going to still go for the safest one, right? And especially now, you're seeing a bit of recession. The remaining monies that people would like to invest in would still be BTC. I mean, that's a no-brainer for us here.
Right. And I think, let's talk about the implications of what that can mean for Web3 and the industry itself, right? So TradFi is coming in. Now, there's a lot of things that you could say you don't like about it. There's things I don't like about it. I don't like what I think looks like some cronyism happening again at scale in our country. But forget all that for a minute, right? Let's look at the positive side of it. So what's the positive side of it? Regardless of all of that, if BlackRock or someone like them, and it's probably going to be BlackRock first, right? But then soon thereafter, Fidelity. Fidelity's already hinted that they may acquire Grayscale. If they do so, Grayscale immediately will then convert Grayscale Bitcoin Trust into a Grayscale ETF, and Fidelity will benefit and have $16 billion of Bitcoin under their house, as well as their existing footprint to go push retail investors into the ETF. So that activity onboards masses. It will drive price as a function of all of that. Let's say price gets to 100,000, 200,000, which it likely will in the near term, 18, 24 month period. That's not hard to believe, especially with the halving coming up. What does that mean? What that starts to mean is that now pension funds and other large trillion-dollar AUM asset managers will start to look at it or feel like they can buy it, right? Because at 50 grand, at 25 grand, it's too small. They can't buy it. They can't allocate enough because 1 to 2%, they can't buy enough of it, right? When it starts to get to 200,000, all of a sudden a pension fund can allocate 1 to 2% of their total assets under management into Bitcoin. And they're not going to do that direct. They're going to do that through a major prime broker, whether that be they're going to do that through somebody like a BlackRock, right? They're not going to trust, they're not going to deal with the brain damage of doing it for themselves. But when those orders come in, now you're talking about all of a sudden 1 to 2% of $1 trillion fund is $100 million, $200 million buy all at once. Well, that's not necessarily going to be available. So what I think is going to happen in the short run, just my hunch, is that you're going to see a lot of OTC buys through people like SDM in Canada and some others, where the larger institutions are accumulating while it's in the $28,000, $30,000 trading range and floating back and forth between 25. because they don't want to move price, right? They want to get as much of it under the hood as they can before this gets approved.
That's
They're not
the
going to do
deal.
that on exchange. They're going to do that over the counter through something like SDM. When they do that, they're buying as much as they can without moving price. Now, once it becomes public or the ETF gets approved, that's going to drive price, and they're going to still probably do OTC somewhat. But at the end of the day, what does it mean for the industry? What it means is retail investors who had some or a little are going to be richer potentially, right? They're going to see an exponential lift. Now, they're going to choose one of two paths. They're either going to divest some of it or they're going to hold on to it. And if they hold on to it, they can fund startups through loans against it or whatever other instruments and products get launched. And that's where it could be good for the industry, right? Is not only as a legitimization of, the asset class, but also as a liquidity provider for people that are true Web3 people, that do buy into the ideology to say, well, now I'm richer, like they were in 2017, right, Travis? And now I can go start, or I can fund this startup. Maybe my ether's up. Maybe some of these other things got drag along effects. And so I think in that way, it's positive for the innovation community because they will have more money to invest. And
you said something kind of interesting there that I want to poke at real quick before you keep going. So right now, Bitcoin just dropped under $30,000, right? The total market cap for the crypto that's available right now is about $580 billion. So that's too small for somebody who can come in. $580 billion. That's like not even 1/10 of what BlackRock manages if they wanted to try to come in and buy it all, which they couldn't do because there's so many people holding. There's so much Bitcoin that's been lost, et cetera, et cetera. However, if we get to a Bitcoin that's 10x this, sitting at $300,000 Bitcoin, then the total market cap is $5.8 trillion, which is probably a little more in range with the large scale assets that you're talking about.
Yeah, and I mean, here's the question that, I think Donald was alluding to earlier, right? Is depends on what you're looking at this as. Is it a speculative asset I want to trade? That's one strategy. Or is it the hardest collateral that's ever existed that I want to will down for generations? That's option two. If it's the latter, right, Travis, then to your point, right now, I think I read a stat somewhere, it was on CoinDesk or somewhere, that 68% of wallets that hold Bitcoin are off exchanges. And what that means is that they're not interested in selling, right? Because they're holding it somewhere where it's not readily able to put a bid and an ask out. So what that means is you take that current market cap and then you divide that by 2/3. Like you take 2/3 of that away, that's not even available. So the float, as it would be, and like what's available to actually purchase is 1/3 of actually what's there. So if that holds, which it probably won't, it'll probably go down to maybe 40-50%. But the point is that if it holds anywhere north of 50%, when it's a $5.8 trillion asset, when it 10x's from here, really maybe only $2.5 trillion is tradable. And when you have $10 trillion funds or $5 trillion pension funds or $1 trillion or $800 million asset providers trying to buy 1 to 2 to 5% exposure, it's just a function of supply and demand, right? The price must move. And as the price moves, then people that have held will have increased net worth or increased liquidity. And how they choose to access that liquidity will be dependent on their strategy. Some will trade and take profits out and then try and buy it back on a dip. Others will just hold forever and only live with whatever LTV, loan to value ratio, they can get against it, and they'll invest that way.
I tell you what, one thing is whenever crypto and the bull run happens, man, there's just so much liquidity flooded into the market, people building and doing stuff, and it creates a whole lot of excitement when crypto's doing its thing and like, whoa, this coin just do. But I think Brad Mills was calling it, saying this is that he's on Twitter. His name's Brad Mills Can. He's based out of Canada. He is a Bitcoin maximalist, and he said this bull run's going to be different than the other ones. These altcoins aren't going to do the Ponzi Palooza thing that it was doing before because the SEC is trying to regulate out some of that stuff because they don't want the small guys being able to do some of these things and getting wealthy. They like to keep the lid on things. So Bitcoin's the asset. That's 30 grand for one. You don't have to buy all of one. A lot of people don't realize that still to this day is you don't have to have all of, you don't got to drop 30 grand on to buy one. You can buy little amounts of it at a time and stack those Satoshis up, because if the ETF is coming and it looks like it is, guys, then it might be a good time to sort of rethink your investment strategies as the global economy is doing some weird things. Maybe put some of it into some long-term digital assets and go for the ride, because it's going to be a ride. I'll tell you that.
Yep, absolutely. So big week in Web3. I'm sure this will be one we watch over the next coming weeks. We'll see how it pairs out, but
either way, it's exciting. There's some great news that's happening, even though it's BlackRock, who I'm not a fan of. It's a cool, good, positive news for the crypto space, because once these big financial investment companies start getting in and retail investors can have access to this, that game changes, folks. That game changes in a big way, and we're closer to that than you could even possibly imagine. We're less than a year away from the halving now. So
yeah, and just in case the tinfoil hat is right, I will say this: if for some reason BlackRock gets the denial, if the SEC denies BlackRock, that would be a temporary setback, in the sense of that would be a signal to most of the market that this is not a legitimate asset class as far as the US concerned, even Bitcoin. And it would be a big time short opportunity in the short run. I give that as a percentage, probably less than 5 or 10% to happen, only because Jerome Powell came out this week as well and was saying something about this as a legitimate asset class that's here to stay. There's too many moving parts around it that are vaguely semanticizing things that make you believe this is probably going to get approved. But in the event that it doesn't get approved, like the 30 other attempts so far have not been approved, and Gensler does whatever Gensler wants to do, which he seems to be willing to do right now. For the BTC maximies, for the Web3 people, just understand the halving's coming doesn't give a crap, right? And so the rules of the road have always said we haven't had Wall Street to this point, and we've gotten to $1 trillion asset class. And it may take a little longer. The minute that an ETF gets approved, this thing goes exponential. But even if it doesn't, even if this gets denied and whatever, and the US tries to be King Kong, Asia, other places, this is not going away. The halving's still coming, and it's programmatic, and you can't stop it.
It's a big signal. It's a big dog whistle that's come out. Whoop, oh, BlackRock's going to do this Bitcoin ETF. Now, when you look at that and you go, wow, the US is in $30+ trillion worth of debt. Who do they owe that debt to? I know this is that a lot of politicians and a lot of people, tinfoil hat or not, I welcome the tinfoil hat, because if you don't do some critical thinking and look down some of these rabbit holes, you're not going to see the full truth. The truth is a lot of these politicians are beholden to BlackRock. And so if they thumbs down BlackRock, it's because they wanted BlackRock and wanted the assets to be thumbs down. So we're just going to have to see how this all pans out, because it's definitely going to keep more people on their edge thinking about crypto. So at least on the short term, it should be going something like this. But whenever the SEC pulls the trigger one way or the other, it's definitely going to impact things globally. And we're going to see, all right, whose hands are in whose pockets.
Yes, we will. And fall's going to be exciting. So Donald, while we wrap up this episode, talk to us a little bit about the exciting things happening in Manila. You've got a big annual second year event happening in September. Talk to us a little bit about that for those who want to keep score, and we'll take it out from there.
Yeah, we're launching the actually next week. There's the second Philippine Blockchain Week. So it will there's a Korea Blockchain Week on the first week of September. There's a Token 2049 on second week of September, and we round up the Asian tour of the blockchain with a Philippine Blockchain Week. We're going to focus a lot on AI and how AI would power the blockchain and how it will make it more efficient from a platform, from a technology perspective. We're bringing again 100 speakers to that event. We're talking to so many parties right now, wanting to be part of that show. So I hope that if any one of you are going to swing by Asia for these three big events, we're be locked and ready to make sure that we'll make it worth your while. No? And you've been there, Chris.
Yeah,
I
having
hope
been there
Travis
last
Mhm.
year in the inaugural year and seeing 5,000
Yeah.
people and
Yeah.
and just young and energetic, and I was blown away. I can't imagine how awesome year 2 is going to be. I know Travis is excited. So yeah, we'll put the link down in the bottom here, guys, but make sure you check out pbw.ph, and if you have not been to Manila, you owe yourself a favor and get that passport shined up for a busy month in September. Awesome.
Yep, thank you. Yep, see you all.
Thank you, guys. We'll see you next week.
Yeah.
Next time we do the Web3 show. Thanks for tuning in.